Yo, what is good, guys? Welcome back to another video. Today, we're going to be going through the top stocks to watch before 2026. We're going to be looking at news and everything like that to have us have a jump start into the new year. With a lot of things getting lifted, like marijuana and the robotic news that we got, these stocks can make you 50% or even more. Depending on how you trade too, you can trade some options and you can make even more than that. So without further ado, man, let's get started. We're going to start off with some marijuana stocks. You guys may be wondering why. So marijuana stocks are going crazy after we've seen Trump coming out to cut restrictions on marijuana through planned order. It will be classified as a scheduled ill drug, similar to painkillers. So now we know loopholes are needed and it's good for cannabis stocks overall. We're going to look at some good ones and the top ones. So first one on the list is indeed TLRY. So they're very diversified right now. It is a Canadian licensed producer that has diversified heavily into craft beer, sweet water, and spirits to offset cannabis struggles overall. This is a go-to stock for Robinhood and retail traders, so you will see a lot of money going into this. The alcohol sales provide a steady cash flow while they wait for the US cannabis legalization overall. And with this news, we could potentially get that next year. So if you get in pretty early, you can make a decent amount of money off of this because they're already stable. They already make some money off their alcohol. And now with the legalization of marijuana, getting more diverse, and honestly making it kind of a painkiller, that'd be even better for the stock overall. It also has some meme potential. A lot of you guys like meme stocks. So honestly, man, if you buy this at 12, it gets into that meme territory, goes up to 60. This can be a good hit. Some price levels that I'm personally looking at is going to be this high right here, $10.38, but maybe $10 flat for this stock, and or be a little bit more patient. You could potentially get at $9 or $8. This one you can be patient with, but I do recommend getting it before 2026. And with this news that came out, of course, the stock's going to be spiking. So just see how it reacts. If you continue to the upside, then you might have missed your chance. But if it can sell off a little bit, you can load up. This can be something to get your portfolio diversified and or some long-term call options. So some more on this stock. The average price target is around $8 to $25, but it averages out to 16 bucks. And right now we're trading at $13. So we're still a little bit below the price targets, and maybe they can even get lifted even more, maybe go a little bit more higher with this news that came out. Next stock on the list is a little bit cheaper. I do recommend waiting until it gets maybe $7 to $6.50, but it is QTBIF, Green Thumb Industries. So what do? They're top tier US multi-store operator, MSO, based in Chicago. They sell cannabis, consumer packaged goods, and they run a decently profitable chain. So unlike most of the peers, they have a long track record and GAAP profitability. They have strong cash flow, strong balance sheets. This one is pretty good and it can survive longer than other cannabis stocks overall. So while they might be bearish though, limited liquidity as a US operator, they still trade over the counter, limiting institutional buying until uplisting is allowed. Some of the price targets, so average price target is $16.80. And sometimes we got some $11 to $13 levels as well. Right now, we're still trading below that. So it's a pretty good level. You can potentially see them at $16. And if you can get at $8, you can potentially 100x or 100% your returns. Let's talk about the next one, TCNNF, Cannabis Corporation. So it is currently also trading at around $9. A vertically integrated US SMO with massive dominance in Florida, plus operations in PA and Arizona. They are the largest retailer by volume in the US. So this one is pretty big, especially if we get some more news come out. This one can be even bigger. But with that being said, scale, their massive footprint means there are more ETF of a US cannabis if the sector grows. And honestly, they do grow. And with this news, they're going to grow even more. Bearish, some of the bearish news, they have a lot of cash burn, prioritize growth over efficiency for years, leading to thinner margins than a green thumb. So keep that in mind. Average price target is around $3.50. Stock has rallied near this target. Analysts may revise it up soon, so keep that in mind. So it is a little bit overpriced right now due to analysts, but with that being said, $9 ain't bad. I would recommend waiting until it gets down to maybe $6 again. But honestly, if this rally continues, like I said, with the last stock, you might have missed out. But honestly, sometimes it is good to sit out because if you can get it down at these levels, they could be good buys. So next one is CURLF. They are the largest cannabis company by revenue market cap. They operate in 17 US states and have growing international presence in Europe and Germany. And you guys know it's legal in other countries as well. But scale, their massive footprint means that they are an ETF of US cannabis. And their average price target is around $3.50. We are above it, so keep that in mind as well. This one we are kind of trading a little bit overpriced, but if you can get it back down to like that $3 to $2.80, that could be a good level to watch. But I do recommend watching that $3 level because we are kind of looking like we're selling off a little bit. But just have your patience with this one. If you can scoop this one up at $3, this one can make you a decent amount of money to say. Last but not least on this one, we have CRON. It's another Canadian one. It is backed by Tobacco Giant. They focus on rare cannabis, so like vapes and stuff like that. Spinach brand. I don't even know what that is, but that is it. But they have a huge cash pile. They have $800 million plus in cash, which is kind of insane. So honestly, they have a plus margin, but their bearishness, they have low growth. The revenue growth is often slower than peers. So keep that in mind. And the average price target for this is $3.25 to $4 USD. And we're kind of currently trading underneath $4, but we're trading a little bit over $3.25. So honestly, this one has been growing even before that news came out, but I would recommend waiting until that $3 level for this one as well. That could be a good scoop up, and or even wait a little bit longer to 250. 250, if you could scoop this one up at 250, you're kind of lucky, because then if you do get some spikes like we've seen recently, you can probably 100% this one too, and this one might be a little bit easier, and it looks a little bit more appetizing if you can get it back down at those lows. Just want to say I post daily news, everything you guys need to know about the stock market on my X account. And I also post the plays that I get from my long-term and short-term option plays. You guys can make a lot of money. Don't miss out and follow me on X. So now it's time to talk about the robotic stocks. So the Trump administration is pursuing a national strategy to accelerate development and adoption of robotics overall. These are going to be companies that are going to benefit off of this, and especially with robotics getting up, these are ones that you don't want to miss. So the first one on the list is ISRG. So the absolute dominance leader in the robotics assisted surgery, and honestly, robotics in surgery and medical field is going to be pretty good. They have Da Vinci 5 launched. Their newest system, DV5, is rolling out with force feedback and AI analytics, driving a massive upgrade cycle for hospitals overall. Why are they bearish? So it is priced for perfection, high PE ratio. Any slowdown in hospital spending causes the stock to drop sharply. So please keep that in mind. Average price target for this one is $615 to $625. So keep that in mind. We're currently trading at around $542. So honestly, just keep that in mind while trading this one. Next one on the list is TER, and they are a dual threat company. They make massive automated test equipment for semiconductor chips and own universal robots overall. So this one is a pretty good one to have on your radar. They have chip recovery as AI chip demand booms like NVIDIA and AMD. Their testing equipment is essential for this. And why are they bearish? Half of their business is tied to a volatile semiconductor cycle. So please keep that in mind. But right now, chip demand isn't going to cool. But if it does cool, the stock will fall regardless of how well the robotics do. And their current price target is around $200. So right now it is priced below, but we were kind of trading around that $200 range. So keep that in mind. Oracle news just came out, so that might have dropped it on Friday. But some way to scoop this up might be around that 170 to that 180 level. If you guys have patience for that, that is a pretty good level to scoop this one up at. But this is one that can benefit in the new year and when the new year comes out. Last but not least, until we get to some other stocks, is going to be SYM. So the AI warehouse play right here. They build massive end-to-end AI-powered robotic system for warehouses overall. And honestly, if you look at, Amazon or anything like that, they're working in a warehouse, and this is where robotics are probably going to start in warehouses. But they have Walmart backing. They have a massive multi-year deal to automate Walmart's supply chain. So that's pretty big for Walmart, because Walmart is a pretty big company as well. But why are they bearish? So they are growing extremely fast. With its strong growth, installation without glitches is incredibly difficult and expensive overall. So they might be spending a little bit more money, but with their fast growth, you want to look at this one like you look at NVIDIA to say how fast they grew. Current price target is around $55, and it's around $40 to $70 based on their quarterly revenue. And right now we're trading at around $61. So kind of mid-range, but 55 is that level to watch. If you guys want to see like a level to see, maybe that $58 level to buy in, and or even look at this level right here, the 52.5. That could be another good level to load into this one. But they are growing extremely fast, and this is one that you potentially don't want to miss out on. So some other stocks to watch. First off on the list is AMD. Honestly, man, AMD is still in the shadows of Nvidia, but I have to mention this one because this one and Nvidia are two great stocks to watch. And I do recommend looking at AMD, but look at AMD at around that 195 to maybe even that $200 level to load up once again. You might have to give this one some time, but AMD and Nvidia are two good stocks to watch. Next one is going to be Apple. Apple is a little bit overpriced in my opinion. Not really too overpriced, but overpriced for a long term. I told you guys to load up a while ago on this one, and this one went to the moon, or not really too much to the moon, but it went up pretty well. With that being said, I am going to be waiting personally for like 270 to maybe even 260 level. This one just blew up way too fast recently, but Apple is pretty good, and they're doing pretty good with their AI. They're not spending too much money. They recently have that deal with Gemini for Gemini to be on their iPhone. So basically, they're paying for AI that they don't really have to research because Gemini is already on Android. So Nvidia is also a great one just because the average price target is around $225. Why is that good? Because right now we're trading at around 170 to 176. I'm personally looking at like 170 to like 165 to load up on some more shares of Nvidia. And last but not least, I'm going to talk about Tesla. Tesla is also another overpriced one. I would recommend waiting until it falls down to a decent amount, maybe even 420 to that 400. But they're also another one that's probably potentially and most likely going to lead in the robotics race. And also they have their, EVs and stuff like that. But the robotics can be pretty big. And Elon Musk himself even came out saying that they can use multiple cars as a data center. That's kind of insane. That's how he wants his Teslas to be. So you might see in the future about, him getting into that. But with that being said, these are some stocks to watch and buy before 2026 ends. Let me know what you guys got in the comments down below. Follow me on X, and I'll see you guys in the next one. Peace out.